I want to show you the overview I want you to pay attention to. So let's look at this form here. So we're speaking about 8283. So you can see on the screen here that we're talking about non-cash charitable contributions. So what you want to do here is pretty straightforward. You want to put your first name, last name, and you want to put your identifying number. So here we're speaking about either your EIN, your employer identification number, or your social security number. So now let's go to Section A real quick. So Section A really deals with donated property of $5,000 or less and publicly traded securities. So you want to list actually the donated property here in column one, if you will. So you can see here that we actually listed the organizations to which we donated some kind of property during the year. So we put the Salvation Army. You have to put the organization, the address, the zip, everything, and the state, everything. So we put here that we donated various clothes, and also we donated various gear to the Red Cross, and also we donated various supplies to the Good Cause Foundation. Of course, here we are speaking about something hypothetical, but if you were to send this to the IRS, you have to actually contextualize your donation. You have to be clear. You have to be detailed. Also, very important. And please make sure that you have you have your receipts. You have everything, every evidence to back up, to substantiate the claim that you are making here. So basically, if you go to the bottom column here, you have to put the date of contribution, date acquired by the donor, how it was acquired, the donor's cost or adjusted basis, the fair market value, and how you are able to determine the fair market value. So here we put online appraisal, but there could be other ways to actually determine what the value that you are ascribing to a property. And Section B here, Section B, this talks about something very similar, but we are going to move forward here. So basically, Part 1, I'm still, Part 1, so the next screenshot here, this is actually information on donated property. Again, this is actually Section B of Form 1, of Part 1, rather. So we're speaking here about equipment, collectibles, and clothing and household items. And you can see on the screen here, the same thing. You have to put a description of the donated property, and so also the appraised fair market value. So it's all about providing the IRS with the market value of the property you have donated. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. Let's talk about Part 2 here. So Part 2 basically had to deal with partial interest and restricted use property. So here we are speaking about anything else than qualified conservation contributions. So I just put it here. It's not applicable to our situation. But if this is applicable to your situation, let us know in the question in the comment section below, and one of our team members will get back to you and explain everything to you depending on your situation. I mean, but for this video, we're not going to go into too much details for time's sake. And so Part 3, the same thing here. So taxpayer donor statement, and it's one of those things where the IRS wants you to really clarify your donation so everything is clear to them. And one thing I want to say here is that Part 4, as you can see on the screen here, you have a declaration of the appraiser. If there is an appraiser, the appraiser has to actually sign, has to actually put his or her name, has to put his or her title and the date. That's for properties that are a little valuable. So I mean, you know, if they go above a certain threshold, a certain monetary threshold, then the IRS wants to have a signature of a certified appraiser so that things are pretty clear to the agency as well. And now you have Part 5. This is where you have to have a donee acknowledgement. So a donee is actually the person is actually the organization that you donated some property to. So that donee has to acknowledge that, yeah, they received this property from you. Now the IRS wants to have that just in case there are especially when it comes to certain valuable donations. The IRS wants to have that, and the IRS, and it's not just about acknowledging the property. The organization has to provide its own information. So we're speaking here about employer identification number. We're speaking about the name of the charitable organizations. This is the donee, the address, the authorized signature. So there has to be an authorized signature from an executive, from at the organization, so the IRS knows everything is legit, because they check those things, So make sure that the authorized signature of the person must put also his or her title, and in which capacity he or she is really signing this form, and so everything has to be clear to the IRS. Okay. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about Form 8283. Now, let me talk about the steps you need to really follow here. When should you use the Form 8283? Well, federal tax laws allow you to claim a deduction for the value of all property you donate to a qualified charity during the year, provided that you itemize your deductions. Okay. Remember, I use the word here, qualified charity, not qualified property, qualified charity. The charity must be qualified. Okay. Now, generally, any nonprofit organization that promotes, let's say, religious, literary, educational, scientific, humanitarian, and or other charitable causes will qualify. However, if the combined value of all property you donate is more than $500, you must prepare Form 8283 and attach it to your tax return. So $500, that's the monetary threshold. Now let's talk about valuing property donations now. When you donate property to a charity, the IRS allows you to deduct its fair market value. And it's one of those things where when we talk about determining fair market value, it is basically your responsibility. It is your responsibility to determine the value of your property donations. There are many ways you can do this, but regardless of the valuation method you choose, your estimated value must always relate to a realistic price that a buyer would pay for the item in the open market. So they actually use a term called the arm's length. So this is a transaction that happens in the open market. For example, if you donate used clothing, the IRS suggests you reference the retail price the thrift stores in your area charge for similar items. But if you donate a used vehicle, you must reference a reputable used car price guide that factors the make, model, year, mileage, and overall condition into the price, instead of using the price that dealerships in your area charge. And if your donated car is valued at greater than $500 and the charity sells it, you should receive a Form 1098-C from the charity that states how much they sold it for. This amount is what you can take as a deduction. Some property donations, such as a rare piece of art, may require you to obtain an appraisal from an art expert. And so this is one of those things where, as you saw earlier, the IRS wants to have all kinds of information from that expert. So when we talk about appraisal, it's really important to understand that obtaining property appraisals is kind of important, especially when we are speaking about certain valuable items. The IRS requires you to actually obtain a qualified appraisal from any single item or group of related items you donate that have a value of more than $5,000. For example, if you donate 5 rare first edition books that each have a value of $1,200, you must obtain an appraisal because the items are similar and in total they exceed $5,000, right? 1,200 times 5, we are speaking about $6,000. So the appraisal must be done by someone who holds some expertise in the type of property and must be signed and dated no more than 60 days prior to making the donation. The appraisal must also include a description of the property and its condition, so the IRS knows exactly what happened. And the appraiser must also sign Part 3 of your Form 8283. You saw that earlier when I showed you. The appraiser has to put also, in some cases, his or her EIN. And so preparing Form 8283 is pretty straightforward. And because to complete the remainder of the form, you have to actually find the appropriate data. You must have the name and address of all organizations you made donations to, descriptions of all property, information on how you initially acquired the property, the amount you paid for each item, and their respective values at the time of donation. It's always important to contextualize the donation. So if you maintain adequate records of your donation during the year, Form 8283 requires minimal time to complete, and it's pretty great. And if you use actually a tax software to do things, you you automatically have the right forms of that are available right away. Now there are some limitations in terms of deduction. So annual deduction limitation really depends. Now preparation of Form 8283 does not guarantee that you can deduct the entire value of your property donation in the current year. So for most of the organizations you make donations to, the IRS limits your combined annual deduction to 50% of your AGI. So we're speaking about your adjusted gross income. And so in the unlikely event your deductions is limited this year, you can always deduct the excess on one of your next 5 years. So you have carry forward to 5 years. Fantastic. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about Form 8283. Let me give you an approach you need to really follow here when it comes to Form 8283. We're speaking about non-cash charitable contributions. It's really important to understand that donated non-cash items may require an appraisal to determine their value. And again, it's all about that 5,000 is always the threshold. Now, if you have any doubts, please let us know in the comment section, and one of our team members will get back to you and really sort of explain things to you a little further. And one thing I want to say here is that appraisals are not required for profit stock valued at $10,000 or less in intellectual property. Okay, and Form 8283 should not be used for out-of-pocket expenses generated by volunteer or charitable work, or for cash or credit card contribution payments or expenses. So this is important to really understand that. I mean, we're speaking about non-cash contributions, okay? Because the cash contributions can be easily traceable, but non-cash contribution, that's where the IRS may have a little bit of problem in terms of determining the value of your contributions. Now, this form is available, the Form 8283 is available for individuals, partnerships, and corporations to report their non-cash charitable contributions. And if the deductions for the non-cash gifts, if that gift equals more than $500, okay? So $500. Now, the only exception to the $500 rule is for C corporations, which must file actually Form 8283 only if their charitable donation exceeds $5,000. And you can actually list up to 5 donations to 5 different organizations on Form 8283. And if you had more donations, you can attach as many Form 8283s to your 1040 as you need. So the flexibility is there. And so I just want you to remember that it's only for non-cash. So we are not speaking about out-of-pocket expenses generated by volunteer or charitable work, or for cash or credit card contribution payments or expenses. But because there are other forms that really apply to those scenarios, but please do not forget that I want to insist on the fact that you gotta maintain a solid paper trail. You gotta maintain a solid trail of documents, just in case the IRS is curious about your contributions and is asking questions. You can provide the appropriate documentation. One thing I want to say here is that a Form 8283 cannot determine the taxpayer's charitable contribution limits. Okay, there are other ways to make that happen. So you got to really go through the whole process. One thing I want to say here is that please do not forget that in terms of providing clarity to the form itself, you got to really follow a certain approach, if you will. And so you have to, for instance, don't forget to have your EIN, your employer identification number. If you are an individual, don't forget to have your social security number. Without those two, without either of those, the IRS cannot process your Form 8283. And so the filer will then fill it out the following information for each column in Part 1 of Section A. So we're speaking about the name and address of the organization. In case there is an organization, the vehicle identification number, so the VIN number of, so if the property donated is a vehicle, the IRS needs to have the VIN, and the property description. So if it is a vehicle, the year, make, model, mileage, and general condition must be included. For securities, the name and number of shares must be inputted. You have to put the date of contribution. the date when the property was acquired. So this is kind of important in terms of making sure everything is clear to you. The details on how the property was originally acquired. So at least here we have a clear idea what's really happening here, and the cost or adjusted basis. So this should not be filled out actually if the property was held for at least 12 months or for publicly traded securities. And the fair market value. So we're speaking about the, again, going back to what I said about the FMD. So you got to have a clear idea how you actually achieve the fair market value. And in our case, as you saw, we actually used we put their online appraisal, but just make sure whatever medium or whatever approach you use to determine fair market value, it has to be realistic. It has to make sense to the IRS. Okay. And one thing I want to say here is that Part 2 should not be filled out if there was less than an entire interest in the property listed in the previous section. Taxpayers who file Form 8283 and have made contributions of motor vehicles, boats, or airplanes must also include Form 1098C, which shows the gross proceeds. One thing I want to say in general in terms of appraisal is that you got to make sure that you have the proper appraisal from somebody who really knows what he or she is talking about. I mean, simply just saying, listing an appraisal and say, yeah, I had this property appraised by this person, and it doesn't cut it. No, the appraiser must have the expertise, and we're talking about having the appropriate licenses in his or her state that says, okay, this person has a valid appraisal expertise. Okay, and it's one of those things where when you go into those quote unquote niche situations, you want to have the appropriate appraisal done. And so we're speaking about we're speaking about you having an idea of someone who can really vouch for the value of the item. Appraisals are now required for publicly traded securities. I said this before. An inventory or property, let's say property held primarily for sale to customers in the ordinary course of your trade or business, doesn't need any appraisals. A qualified vehicle, including a car, boat, or airplane, if your deduction for the vehicle is limited to the gross proceeds from its sales, and you obtain contemporaneous written acknowledgement, and intellectual property also doesn't actually require an appraisal. And it's important to really understand that. And one thing I want to say here is that you have to make sure that the appraisal is always current. Now, do non-cash contributions require an appraisal to prove their worth? Yes, only in certain circumstances. Art pieces valued at $20,000 or more need a written appraisal from a qualified appraiser. A household good that is not in good or better condition must have an appraisal. Jewelry and gems almost always require an appraisal. And so it's one of those things where the IRS just wants to, see, the thing is, the IRS just wants to have another opinion about the value of a donation, because otherwise taxpayers may actually inflate the price of certain donations, really. Okay. And one thing I want to say here is that, again, in the spirit of transparency, make sure that you keep all your records, all the receipts, all the donation statements, all the donation acknowledgments. Also, you want to keep all proof regarding an appraisal that was done, and also the signature. And do not forget to always have the seal of the appraisal if this is applicable to your specific state. Thank you so much for your attention. I really appreciate it. In today's conversation, I spoke to you about Form 8283, and let me quickly do a recap here. So I gave you the overview, the steps, the approach, and now the recap. Thank you so much. God bless you. I'll speak to you another time. Until then, remember, stay marvelous.